Hello guys, welcome back to another liquidity inducement breakdown video where we explain how you can trade just like us. I'm Ben, your analyst and trader.
And I'm Kagan, the other trader, but today I'll be here asking questions that you might have in our trades that we took today.
All right, to keep this video short, I'm just going to walk you guys through all the trades that we have pretty much taken in today's session. And hopefully after this breakdown, you guys have a pretty good understanding of why I have taken each and one of these positions during London. To go ahead and start off, let's go on to a more macro time frame here. I prefer to stick to the 15-minute, and I'm pretty much going to walk you guys through each and every little bit of detail I can on what maybe to decide to take each three of these entries here. So to start off on the 15-minute again, the first thing that I was doing was that I had a little bit of a 3-day look back here. And because it was the beginning of the week, I kind of ignored all this information here, besides the fact that the market has been trending down for quite some time now.
So,
Also,
quick question there. When you're doing your analysis right there, do you usually go 3 days back? Is that sufficient enough usually, or do you usually cap it at 3, cap it at 5 days back?
from an intraday perspective, usually you need around a 3 to 5 day look back. But if you're looking for major swings, then that's when you have to move out to the daily, such as here. In this case, I was looking at the daily for a little bit. There was an OB right here that I refined to this point here, right? And that initially allowed me to understand that, okay, price might have a reaction at this point here that might pretty much induce some bullish behavior, right? All this was liquidity, right? I really want all this to be swept into this POI here for the real main move. However, we can still expect a reaction at this point here. Now, if we go into the 15-minute, like before, we know we have reacted from this daily OB, this refined daily OB. So immediately, I'm already assuming buys at the beginning of the session. From a 3 to 5 day look back, what do I have here? As I explained before, we've been coming from a downtrend now for quite some time. And if we look the previous day before, we can see with the price delivery being established here that we have 1, 2, 3 cycles of drop, which is also called price cycle inducement. Now,
So why the blue dot right above the first cycle? Why didn't you count that one?
this one right here. So I will go over in a future video what price delivery is, but we can see that all of this right here is liquidity, and our initial breakout of this liquidity was right here that has formed new structure, right? Price cycle inducement only really works when you're trading the same structure. We can see that all this right here is all part of the same structure. So each hit to the low here is pretty much why I decided that, okay, this drop, and this drop all refrained to this bullish move, right?
Gotcha.
Or all pointed to this bullish move. So again, this is price cycle inducement, and it's really, really important for understanding where the market might reverse. Now, what was the next thing I saw from a macro standpoint? I saw this hourly OB, which is also a 15-minute OB. I saw this 15-minute OB, this 15-minute OB, this OB, and this OB. Now, let's walk you through the validity of each OB. Are these two OBs valid? They are not valid for instant entry. However, they are valid for confirmation, and we're going to go into that a little bit more as we get into the lower time frames, right? So on the 15-minute chart, what I could see right here was that we not only broke previous day lows, which are right here, which were swept, right? But we also had our first mitigation in the Asian as a buy, right? I like to look to see where price has mitigated first in the Asian to kind of get an idea of where price might be heading. In this case, our most recent mitigation before Frankfurt Open was buy side.
So does the mitigation have to happen within the Asian cycle, or if the mitigation happens let's say out of the Frankfurt, that's still a valid way to look at it?
Well, you see, there's mitigations happening all the time. There may not even be a mitigation within the Asian POI. In this case, there was. You want to look at your most recent mitigation in the Asian if it does happen from a high time frame perspective, which would be this POI right here.
Gotcha.
So in this case, like I said, it was inducing bullish behavior. What else did I have? I had this trend line kind of forming all the way down in this break of the trend line, which also made me assume that all this right here is liquidity that needs to be taken out, right? I not only have this trend line, but I also have from REM's course, the liquidity inducement trend line, which is basically pointing to inducement buys, right? Telling me that price is going to shoot up out of the Asian highs, right? Now, I
Gotcha.
also have this red box here to kind of show how price is being delivered right before the Frankfurt open. This is the liquidity buildup, right? Before the move happens, right? It's very important to identify these little sectors of liquidity buildups, right? Because they're going to help you figure out where price needs to wick or sweep before making the real move.
So if for someone who doesn't have the most experience of looking at a chart and seeing the liquidity, do you have any tips or little things to look out for when looking for these tiny things of liquidity?
Right. So I think I've explained in another video that we like to think of consolidation or liquidity as turbulence,
Right.
right? We don't want to be looking at these minor pieces of turbulence. We want to be looking at the larger picture, these larger pieces of turbulence. And it takes time for your eyes to kind of get trained to see all these little individual pieces of turbulence, right? That actually end up being one giant piece of turbulence, right? And that just comes with constant back testing and practice and just looking at charts 24/7.
Right.
So
Right.
now
Because
let's,
practice
yeah,
makes perfect.
absolutely. And especially with this stuff, it takes 5, 6 hours a day actually trying to get it down. Um,
Right.
but anyways, now that we know from our 15-minute or higher time frames that we know we're looking for buys, let's go ahead and move into some of the lower time frames where we made some refinements, right? And these refinements right here pretty much allowed us to pretty much catch all of these moves. Now, this was a little bit retail what I did here. However, I was able to combine some retail methodology with SMC, which a lot of
So
people hate, but
what do
hey,
you mean
it
by that
works.
retail method right there?
So as you can see here, we did have an inducing trend line, inducing buying, right? So we see prices popped, right? And now we have liquidity building along this trend line for buys, right? I saw, and I already pointed out before that we had this 15-minute POI, which was the first buying mitigation in the Asian, right? Here was that initial reaction, and then we swept that initial reaction, built some structure, right? And because I'm assuming that this trend line is going to continue to induce buying to sweep these highs, and knowing that we're coming from demand, and knowing that we swept previous day lows, and knowing that we have 3 drops of price cycle inducement, and knowing that we have this liquidity buildup, everything pointed to these buys right here, right? This first position was pre-market, right? And sometimes I don't mind trading pre-market, but a lot of the time I really do not trade pre-market. Um, However, yesterday I was feeling very confident about this position. So I was actually able to hop in this for a 1 to 34, right? However, the majority of my position was actually closed at 1 to 20. And by the end of this video, I will go ahead and probably show you guys my entries and profit as well. So you guys can pretty much see that as well. So moving on, we took this initial entry here during the Asian, right? As soon as price broke out of this liquidity buildup and broke out of these Asian highs, as well as broke 15-minute structure over here, price absolutely ripped, right? And once price ripped, my first TP, right, was actually right here, right? I took 20% off at Asian highs. I always like to take my first TP at structural highs. In this case, this was the first structural high that I deemed with importance, right? The second point that I took off was right here, right? And then the third point was obviously right here.
So how many TPs do you say when you're going into that trade?
I usually have
How many
4
TPs do you have?
TPs. I
4
usually have
TPs?
4 T. If I'm trading intraday, usually 4 TPs. If I'm trading swings, I generally try and stay true to my analysis, and I'll only have 1 TP actually.
Okay.
But it really depends on how price is moving in the moment by the day and what's going on fundamentally. So
Gotcha.
moving into these positions here, as the session was moving on, I saw that this 15-minute POI started to form once we kind of got out of Frankfurt. And the reason why I deemed it valid was not only because we had a daily cycle break and retest pattern, right? But we also had, again, this 15-minute break of structure, which allowed me to validate this POI here.
If so, for the people that haven't, very much seen or know what a break and retest looks like, do you want to quickly draw out
Sure.
where it happens?
So break and retest Asian setup is part of the daily cycle where price could be coming in from a downtrend, uptrend. It really doesn't matter. We just have to spot that liquidity buildup in the Asian, see that breakout out of London or out of Frankfurt, and we're basically looking for that retest right here for price to continue. That is the break and retest daily cycle pattern for Asia, right? And that's exactly what we have here. We have our liquidity buildup, right? And then we have our break, our retest, and then price flies. Right, it's very, very important. Daily cycle is extremely important. If you have any questions, please DM and ask, and we will help you out.
Also put them in the comments. I think they were turned off for the last video,
I know.
and we fixed that. So this time they will be on.
All right, but moving on to these positions, what I like to do throughout the day while I am trading intraday is I like to keep up with 1 minute structure, right? Because 1 minute structure is basically telling me where price is going, what direction is price going in. In this case, we are constantly forming higher highs and higher lows. And at this point right here, this break of structure, this what other people like to refer to as Koch change of character, right, happened right here. It wasn't until this moved to the downside that I knew to validate this POI right here. I didn't want to take instant entries because I was still assuming longs because of my bullish bias, right? I didn't want to go against my bullish bias. Neither did I want to go against my bullish position here.
So on a question, I do have a question on that. When you have a bullish position that you have right now, when would it be, okay or to validate the sells actually? When you actually take out maybe
These
your
cells
full
right here,
yeah.
normally, right, it's normally okay to take limits on an extreme here, right? However, if I were to be taking limits here, you honestly could have taken the 1 minute refined limits, which came from here, right? And this would be an okay place to actually take an instant entry because to me, these are
Oh wow,
not
look
only,
at
right, I know,
that.
these are not only your highest probability, but they also give you the best risk to reward. And having all of this risk, which is, let's say we're taking instant entry here of nearly 8 pips is a little bit too much. However, honestly, if you're able to have a stop loss that's less than 10 pips or around 10 to 15 pips, that's generally okay, as long as your risk to reward ratio is at least a 1 to 3. I think in this case, if you were to take an instant entry right at this point here, that looks like about a 1 to 2. So it wouldn't be an instant entry I
I
would
think
take
so.
anyways.
Yeah.
However, what I would have taken that I was unable to spot was post break a structure here. What I would be looking for actually would be a sweep of this liquidity, right? And it for to mitigate something in here before going lower. However, because this didn't sweep liquidity and or mitigate anything here, I was unable to catch these shorts into buys. What I was able to catch though were these buys. And like I said before, we had this 15-minute POI. We know we have our bullish bias. This is our first internal OB that creates what? New structure. And because it is creating new structure, we can actually then take it into New York, but we'll get into that.
So where is your first TP on this buy?
On this buy, it's always structure, right? I always talk about it. We always target structure. So my first structural high or recent high would be over here. So my first TP would be at 1 to 4,
That's
right? And then
20%.
exactly, right? Well, 4%, yeah, 4%. You made
4%.
24 pips, but yeah, you'd make
Yes,
4%.
yes.
Depending on how much you close out, that is. And our second TP was right here at 1 to 5. And then, of course, we were not able to catch TP3. We actually came back and broke even on our last two segments of price here.
And when you hit your first TP, when you take your first partials, you always put your stops to break even at that point?
Right. So whenever we break structure or structural highs such as here, right, I will move my stops to break even so that I'm now in a risk-free position. A lot of the time, I will actually move my stops. If it breaks like a 1-minute structure point, I will move my stops just right below where I entered for
Mhm.
an even crazier SL. So in this case, and rather than having what a 5.8 pip stop loss, we actually now have a 1.1 pip stop loss once we break this 1-minute structural point, right? But again, I'm looking for the main structure points to go break even as well as to take profit, right? Because
Right.
otherwise you're wasting your time and you're actually
Mhm.
going to end up in loss. So now, if we look at the structure again, look at 15-minute structure now. 15-minute structure has now changed from bearish, right, to bullish structure. Right? Now, 1-minute structure as well after this has also now changed to bullish structure. Everything is now bullish. You're probably okay. Let's continue holding these positions. However, let's get into liquidity inducement theorem. And this
Ooh, so
pattern,
fun.
is extremely, extremely important to understand. When we have these first sweep of Asian highs, that is our medium inducement.
You want to
All
quickly
right,
actually change the color of that to something a bit darker?
sure. So let me go ahead and draw that out. Make that, let's say blue.
Yeah,
All
perfect.
right. So whenever we have a sweep of the Asian highs or lows, we need to assume that price is mediumly being induced. This first move is medium inducement. Now for us to go short, we need to trade what? The major inducement. The major inducement is the major move. So this would be the medium inducement, and that was well respected, right? The medium inducement must be well respected. If we just shot through here and touched this POI, I would not have taken an instant entry, okay? However, because we mediumly induced, respected these buys, and then had what? A major inducement, which would be that second pop to this POI here, that has now confirmed my entry into sells for instant entry here. Now, let me go over this pattern again. Everybody sees it a little bit differently, and how REM goes over it and how WWA goes over it also is a little bit different from how I see it. But generally, you need a sweep of yesterday's lows, right? So price will come in, get swept, right? And then we need a breakout of the Asian, a retest for that medium inducement, and then we need to break that medium inducement to initiate that major inducement, right? And then we should expect that sell-off. Now, these would be what? Our London lows, and once our London lows get swept, what can we expect? We can expect New York to form another OB right
Pop,
here, and once that pops off, we can expect that to get mitigated and then run. Notice
which it
how it
did.
kind of makes a head and shoulders
Yeah.
pattern, but that's of course retail methodology, and we're going against it.
Hmm.
All right, hopefully that makes sense. If you have questions on liquidity inducement theory and the patterns revolved
Yeah.
around it, we know all of them. We know all of them very, very well. We're not nuts about it. So
Yeah.
definitely
So
DM us.
so this is an example like of how it's used, but we plan on making a video specifically on that to get really in depth and in all like the ways it can really pop up on the
Sure, if you
charts.
guys want individual videos of each little segment of trading, such as just going over a video of price cycle inducement, just going over videos of daily cycle, videos of Asian setups, we'll be happy to do that.
Yeah.
And let's finish up this breakdown. We did not trade New York, and I rarely trade New York. Why? Because I prefer trading London. I get better RR, and I just tend to do better. However, if you were to be trading New York, you're probably wondering how come we didn't take a position when we came back into this POI. Well, again, according to liquidity inducement theorem, right, we need a sweep of these London lows or Frankfurt lows. These could be the London lows, I guess. But we at least need a sweep of these, right? And once these sweep, we either need 5 pips, right? And keep this in mind. We need 5 pips from the London lows, 5 pips from the London lows in order for it to be an instant entry OB. In this case, we never got an instant entry. All right, so because we were unable to get an instant entry, we had to wait for this internal 15-minute POI to get established. We saw in the 1 minute that we had a break of structure, nice liquidity buildup coming right back down into that POI. As soon as we tapped in, we could have gone ahead and bought. Now, if we missed this entry, that's perfectly okay. We had another break of internal liquidity here. Price came back down, and we could have had a better RR trade right here for buys. That basically covers everything in the recap. So
Great.
yeah, make sure to subscribe, like this video, dislike this video, share it with your friends. And if you have any questions about our trading style or really the variations of our trading style that we're using, we are here for your help, here to pretty much help you. So
Yeah, put in the comments, and we promise we will get to it. Because
all
the
right.
more we could teach you, the better we understand it. So
All right, thank you guys, and I'll make sure to post a little picture of my profit here in a little bit so you guys can see that I got on these EU buys. All right, peace.
peace.